Hey everyone. Welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. Today, we're diving into a report from a company that is making some big moves in the financial markets, and let me tell you, it has got some juicy details about raising money. Before we crunch these numbers,
make sure you are subscribed. And for a deeper dive into join the conversation, check out our Discord community linked in the description below. We're looking at a Form 8K filing from Co-Diagnostics Incorporated. Think of this as a special announcement, like a company saying, hey, something important just happened that you need to know about right away. And for Co-Diagnostics, the big news is about how they plan to raise money. Now, Co-Diagnostics is a company involved in diagnostics, likely in the healthcare space. And like many companies, they sometimes need to bring in more cash to fund their operations, research, or expansion plans. This report tells us exactly how they're going about that.
The core of this filing is a new deal. An equity distribution agreement with a company called Maxim Group LLC. This agreement sets up what is called an at-the-market equity program. What does that mean in simple terms? It is like opening a tab with Maxim, who will act as their salesperson to sell shares of Co-Diagnostics stock directly to the public whenever the company decides.
They're looking to raise up to a whopping $10 million through this program. This isn't a one-time big sale, but rather a way for them to gradually sell shares over time, as needed directly into the market.
Maxim isn't doing this for free, of course. Co-Diagnostics will pay them a commission of 3% on every share sold. So, for every dollar raised, Maxim gets 3 cents. Plus, Co-Diagnostics will cover Maxim's expenses, including their legal fees. It is a standard arrangement for these kinds of deals.
Where will these shares be sold? They can be sold through regular stock market transactions, including on the NASDAQ Capital Market. This means the sales will happen at the current market price, whatever that may be at the time of sale.
Now, here is a critical point for investors. Co-Diagnostics is not obligated to sell any shares. They can choose to sell some, all or none. And they have no guarantee of how much they'll sell or at what price. This flexibility is good for the company.
But it means investors won't know precisely when or how much stock will hit the market.
The program will essentially end when they've sold all $10 million worth of shares, or if either party decides to end the agreement for other reasons outlined in the contract.
So this new agreement with Maxim is designed to replace an older one. This is really important. They had a similar arrangement before, but it is now being wound down.
This filing explicitly states that as of the 30th of September 2025, they terminated a previous equity distribution agreement. This old agreement was with Piper Sandler and Company and Clear Street LLC, so it looks like Co-Diagnostics is switching up their partners for selling stock. This often happens when a company renegotiates terms, finds a better deal, or perhaps the old agreement wasn't as effective as they hoped.
this section talks about legal opinions. Basically, lawyers have looked at this new deal and provided their professional opinion that the shares being offered are legally sound to sell. This is standard practice to reassure investors and regulators.
And, as is typical with these filings, there is a section on forward-looking statements. This is a legal disclaimer, essentially saying that any statements about the future might not actually happen. They're based on current expectations, but of course, things can change. It is a way for companies to protect themselves from lawsuits if their future predictions don't pan out.
They are warning investors that actual results could be very different.
So, what does this all mean? Co-Diagnostics is actively managing its capital structure. They've just wrapped up one way of selling stock and immediately put a new, potentially larger program in place. This suggests they anticipate needing to raise capital, and they're using the at-the-market strategy to do it flexibly.
It is like they're saying, we have plans that require funding, and we want the ability to tap the market as needed, without the pressure of a big upfront sale.
The date of this agreement is the 20th of October 2025. This is quite recent and signifies a fresh start for their at-the-market fundraising efforts. The previous agreement termination date, the 30th of September 2025, shows a clean transition.
The actual legal document, the equity distribution agreement itself, where all the nitty-gritty details are laid out, is filed as Exhibit 10.1.
This is where the lawyers and business people hammer out every single clause. Looking at Co-Diagnostics, this move isn't necessarily a sign of distress,
but rather a strategic decision to ensure they have the financial flexibility to pursue their business objectives. Companies like this, especially in the healthcare and biotech sectors, often have significant research and development costs, and having access to capital through programs like this is crucial for their growth and survival. However, investors should always be aware that at the teeth,
market offerings can dilute the value of existing shares if too many new shares are issued. It is a balancing act between raising needed funds and not overly diluting existing shareholders. This filing indicates they are taking proactive steps to manage their finances, and the switch in partners suggests they are optimizing their approach to capital raising.
All right. That is our breakdown of Co-Diagnostics' latest filing focusing on their new equity distribution agreement. What is your take on these moves for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more corporate deep dives like this. Don't forget to check out the Discord link in the description to join the conversation. Thanks for watching. See you next time.